Good afternoon, everybody. I'm Stacy Scott, and I'm here with Graham Wickham, President and CEO of Wickham Financial and Insurance Services, and we're back with you today for our weekly wrap-up. Graham, it's a big week in the market this week. I know we've got lots of things coming down the pike. The CPI numbers are announced tomorrow. The Feds are announcing the rates on Wednesday. But let's start with what happened last week and then what we can expect for this week.
Yep, sounds good. Really saw the U.S. equities really bounce off of some technical levels or retreat from some technical resistance levels. So we saw the Russell down about 5%. We saw the S&P off about 3 to 4%. 10 of the 11 S&P sectors were lower. Really saw a pretty big plunge in energy, which was down about 8.5%, really led by communications, consumer discretionary, off about 4.5+%. Some fears with oil, per barrel came off about 11%. We have some global demand concerns when we're thinking about per barrel prices. Maybe with energy as a whole, we saw some issues with Keystone Pipeline shutting down. So that really put some pressure on per barrel prices on oil, bringing that down, which is great, though, because if you went to the gas station this week, you saw some lower costs. We really saw gas come down. And I think some of that offset what we saw in consumer prices moving up on food and whatnot, still staying stubbornly high at this particular point. One trend that we did see, we saw the consumer credit climb. We saw more use of credit cards. So we saw the credit card balances jump up about 15% year over year. That kind of leads a bit into maybe a slower demand for consumers if they're starting to use credit and their cash reserves are coming down. I think we saw that come down, their savings rate come down about 2.3%. The credit card balances or use of going up, that might lead into a lowering demand as long as inflation staying high, or fear of a recession and weakening economy going into 2023 might be spurring that on. If we think about internationally, China's still trying to open up, but we saw the People's Bank of China might have to be a little more accommodative in terms of a loosening policy in the monetary system to try to help push up that economy as they're trying to reopen from their very restrictive COVID stance. If we think about international markets and we think about Canada, maybe getting close to the end of their aggressive tightening policy, Australia continuing their slower pace of raising rates. But in the United States, we'll have to see the Fed's meeting tomorrow. They're starting the meeting tomorrow, but they will announce on Wednesday what they're going to do with the rates here.
Okay. Well, it's going to be a busy week, and we'll be anxious to hear what comes out of that meeting. So thank you so much for that, and thank you to our viewers for joining us today. We want to give a few reminders for you. We have our food drive still going on. This is the last week of our food drive, and we're collecting food items for the Center for Family Resources. So feel free to stop by our office and drop off some canned goods to help some families in our community. Also, we have scheduled our Retirement Planning Today class for the end of January. We have a Tuesday class and a Saturday class. Information is available on our website, or give us a call and we'll be happy to provide that information to you. Anyone that you may know, whether it's yourself or someone else who is at or near retirement age, could really benefit from this educational class. And then finally, this is our last weekly wrap-up before the Christmas holiday, because we will not be providing the weekly wrap-up next week. So we want to wish all of you a very happy and safe holiday, and we will look forward to seeing you the following week after Christmas. Thanks so much, and have a great week.
Merry Christmas.